Hi, class. Okay, so now we are doing exercise from chapter 1, exercise 1-15 from the John Wild book, the new book that we're using in Accounting 209 for fall 2016. Okay, so what we've been dealt here is that we have this list of stuff, and it is not in a particular order. Okay, well, actually, they did nicely put this in order for us, so it'll actually be very easy to use. So what we are supposed to do is we are supposed to do an income statement, a statement of retained earnings, and a balance sheet. In this class, we are not going to do the cash flow statement. You will do that in Accounting 210, okay? So let's just read our narrative. On October 1st, Ebony Ernst organized Ernst Consulting on October 3rd. The owner contributed $84,000 in assets to launch the business. Please notice that common stock has $84,000 in it. Just like in the last problem, when the owner put money into the company, they took out the stock in the same amount, okay? On October 31st, the company's records show the following items and amounts. Use this information to prepare an October income statement for the business, statement of retained earnings, and balance sheet, okay? Here's the key to the whole thing. You must start with the income statement because you need the net income from the income statement to update the owner equity. When you look at a list of accounts like this, nothing has been, no transactions have been recorded to common stock, even though, if you'll remember from the last problem we did, every revenue item increases equity, every expense item decreases equity. But because we want to be able to do an income statement, we don't just increase equity for revenue and decrease equity for expenses. We actually give them their own revenue and expense accounts. So always start with the income statement, okay? All right, well, what I like to do to keep me from getting messed up is I like to go down here, figure out where the balance sheet stuff stops. See, cash, accounts receivable, those are assets. Office supplies is an asset, unless it says office supplies expense. Land is an asset. Equipment is an asset. Accounts payable is a liability. Common stock is equity. Dividends are a reduction from equity, so we'll have to use that also to get to the new equity number. Consulting fees are revenue. Aha, right there between cash, between dividends and consulting fees. These are all balance sheet. These are income statement accounts, okay? All right, so let's start with the income statement. So we always start with revenue, right? It looks like we only have one kind of revenue, and that's consulting fees. $14,000. Okay? Now, you've got some choices on format. Some people like to indent their list of expenses and just pop the subtotals out. Some people like to subtotal in the row. I'll do it differently at different times so that you see that it's a substance over form issue, okay? You can decide what you want to do. Okay, so then I am going to subtract expenses. Rent expense is $3,550. Okay, salaries expense is $7,000. Okay, telephone expense is $760, and miscellaneous expense is $580. Okay, so we need a total on our expenses. I'm showing 3,550 plus 7,000 plus 760 plus 580 is 11,890. Okay, so that makes net income work out to be 2,110. See, then it's this subtotal minus this subtotal. So this is the subtotal of these items, and net income is total revenue minus total expenses. Okay? All right. Now I have this information, so I can do the statement of retained earnings up here, and then I'll do the balance sheet across here. Okay? Okay. So I've got this is a brand new company. So my beginning balance in retained earnings, which is exactly what it says, the earnings that are retained by the company, starts out at 0. Beginning balance. Okay, so I am going to add net income, which you pick up from what you just did. And then I am going to subtract any dividends that are paid. Well, looky here. By golly, we did. We paid $2,000 in dividends. So our ending retained earnings is 110. Okay, and that's good because I am going to need this number to make the balance sheet balance, okay? Because we used revenue and expense accounts. We did not just increase equity every time we made money or lost money, okay? So retained earnings is increased by your net income. It would be decreased if you had a loss, and it's decreased by any dividends paid. And there are not very many other things in the world that can affect retained earnings. So you are getting the whole concept of it in this chapter. All right, so now we're going to do the balance sheet. And I'm going to start with our assets over here. Okay, well, I look over here at this list, and this list, they very nicely, now not all of our problems are going to do it this way because sometimes they're going to try to trick you. So you're going to have to learn when you see the name of an account, what kind of an account it is. So cash is an asset. And we're going to start with cash because we always start with what we call our most liquid assets, meaning the most closely to become cash. Next, I'm going to go with accounts receivable. Office supplies, which is an inventory type account. It's stuff that you're going to use in the business. Land. Office equipment. Notice that they have spent a lot of cash getting stuff for the business. Because remember, they started by putting $84,000 of cash into the business. Okay, the next item is accounts payable. That's a liability. So that is the end of the assets. So I need to total these assets. Hopefully the total of these assets will be the same as the total of liabilities and owner equity. Okay, so I'm going to start over here with liabilities. Okay, accounts payable. It appears that is the only liability because the next item is common stock. So I'm going to put accounts payable. 8,500. And I am going to show that as a subtotal for total liabilities. Just like this is going to be called total assets. Okay, then I've got in equity, I have common stock of that 84,000 they told us the owner started the business with, and I have retained earnings of 110. Now notice that dividends, it ends up not showing up on the balance sheet at all. So see, the net income rolls into retained earnings and the dividends roll out of retained earnings, and the only thing you see on the balance sheet is ending retained earnings. And that's what makes the balance sheet balance, okay? Retained earnings of 110. So total equity is 84,110. So total liabilities plus stockholder equity equals 8,500 plus 84,110. So I have 92,610, and I hope that is right. Yeah, there's a 10. 4, 2, 6. There's a 610. 5, 3, 8. 14 and 8 is 2. Yep, 92,610. So see, our balance sheet balances. Uh-oh, I wrote this one off the edge a little bit. Our balance sheet balances, and our balance sheet only balances because we closed out net income to retained earnings, and we took dividends out of retained earnings, and then magically that makes our balance sheet balance. But it wouldn't balance with these numbers. It wouldn't balance with these numbers. You have to do the income statement first and use that net to change retained earnings. Okay? All right.